folks, and welcome to this video. In this video we're going to have a look at the supply and demand software, and for those of you who are using the buy and sell zone software, we can have a look at that. And so the reason I want to do this video is because there's been a fair deal of confusion regarding how we can use the supply and demand software. Okay, and so you can be a monthly subscriber and have access to the supply and demand software, or you can be an annual subscriber and have access to the buy and sell zone software. The only difference is that if you're a monthly subscriber, you have to do this manually. If you're an annual subscriber, you get to automate the process. Okay, but the theory is exactly the same. So I just want to show an account that that I have been trading now. This is just for 1 month. I've recently made some changes to the supply and demand software and buy and sell zone software that considers the amount of time that price consolidates, either before price moves higher or before price moves lower. And this is really important because if price spends an excessive amount of time in an area, well, then we don't really want to trade at the premium price of that area. Okay, and so we want to be selling maybe at a higher price and buying at a little bit of a lower price. Okay, and so the software now is able to identify these periods of excessive consolidation at areas of accumulation and distribution. And here we have a pretty good example of that, where you have price moving down, we move sideways for a pretty long period of time, 1, 2, 3, 4, 5, 6, 7, and then price departs. Okay, and so in a situation like this, I mean, we don't want to be selling at the bottom, we want to be selling at the high of the area of distribution. Okay, and so the algo identifies that area and it says, good, we want to be selling at a higher price, not selling at the cheaper price, which would traditionally be down here or somewhere down here. Okay, and so the box is drawn here now, and I've taken this update, I've applied it to the core, the engine, and the engine is essentially where the buy and the sell zone algo is getting its signals from as well. Okay, so we would expect price to have a friendlier reaction, a lower risk reaction at the top of this period of distribution here. Okay, and so what we're doing, what we would like to do is we would like to trade at these areas. Again, we also have, I mean, this account here, we can have a look at some of the trades that it's taken first of all, because I think this is quite important. And we have quite a few trades. It's been going for about 3.5 weeks, and we're up about 6%, so that's not bad at all. And if we look at the statistics for this, we can see that it looks like this. Okay, so we have a profit factor of 2.38, which is pretty good. Most important, we have average profit trade 213, average loss trade about 113, 112. So that's really good. So the average profit is 2 times larger than the average loss. This is really good because you want this to be the case. You don't want the average loss to be bigger than the average winner, because then you'll have to be winning more of the time. Okay, and if we look at the stats here, we can see that short positions won 50%, long positions won 57%. That's really good. And so we both have the probabilities of the trade winning in our favor, and we also have the average winner versus the average loser in our favor as well. So we have actually 2 parameters working in our favor, which is very, very nice. And then you can get into you can do other things as well, which we won't cover in this video, but maybe I'll cover other things that you can do in a future video, because you can fiddle other areas in a trade to even more so tilt the benefit in your favor. Okay, so let's go back to the charts. Okay, so what we want to do in a situation like this is we want to focus on the trend, and you want to focus on departures in price. This is pretty important. So what I'm normally doing, this is a half-an-hour chart, and this account has been traded. This is 100% automation. There's absolutely no manual intervention whatsoever. Even though one of these trades closed, where is it? Now this looks good. I thought one of these trades, yeah, this one here, this one closed without hitting its target, which is peculiar. But we got close, but I don't know what happened there, but some kind of a market hiccup. Anyway, so we want to focus on how this, on what the algo is doing, because essentially this is what we should be doing as manual traders. So what we want to do is we want to focus on the cycle. Okay, so when I say the cycle, we can look at the histogram. So we want the histogram to be moving in line with price, and we want to be trading in line with the histogram. Okay, and so when we have when the histogram is above the 0 line, then we want to be buying. When it's below, we want to be selling. Okay, so here you can see that we have a short position that's been opened by the robot, which is running on this side of the chart, and it is in line with the histogram. Okay, and so I mean, if we have the histogram below the 0 line, it's incredibly unlikely the price is just going to go north from here. The higher probability trade would be continuing to sell. Okay, and so the robot says, okay, we only want to sell, and so it's only going to take trades that are lined up with the histogram, because this is a higher probable outcome. Okay, and then we have the buy and the sell zones, and so when price gets close to this dotted line here, then there's a high likelihood that it could potentially turn around. We saw that here. We have like the hump here, and we have that again over here, and price turned around. Okay, and so down here we are getting close to this line, so it means it will probably have a bit of retracement, but it doesn't mean that we are going to turn around. It just means that we are having a correction. And so at the times when the histogram gets close to these dotted lines, or even moves beyond the sell zone here, which is a green line, or the buy zone, which is a red line, we don't want to be continuing to sell. So we wouldn't want to sell now. We certainly wouldn't want to sell when the histogram is below the red line, or buy if the histogram is above the green line. That would be a really bad idea, because that would be buying at premium prices and selling. Okay, and so you want to be doing this. You want to be paying attention to what's going on down here. Okay, and so I mean, if you just trade the areas that the software is bringing to your attention, taking into consideration what's going on here, I mean, you're probably going to be doing quite well. So the configuration of the robot, just to show you like an automated approach to this, I mean, it's doing this. And so if we look at some of the trades, I mean, this was a losing trade. So the robot bought right here. It thought that this would be a really good time to buy. And it wasn't. It was a pretty bad time to buy. It bought down here because this was, matter of fact, I'd have to update the settings, change the settings, but this is the beginning of the buy zone, because it thought that price accumulated here for too long, more than 2 periods. So we would have put the entry here, which is what it did, and the stop would be down here. So the stop would be actually down here. But price went into profit just a little bit, and then it turned around. And so, I mean, we lose one, so who cares? That's fine. And we had another trade here, which is also a loser. Let's have a look at that, what happened there. And that trade happened here. So price bought, the robot bought down here, price went all the way up here, which is really, really far, but the trade turned around and got stopped out. Okay, that happens as well. But if we look at the winners, when it's done right, when the robot gets this right, let's find out. I need to find, boom. Okay, so that was a short. Okay, so the robot sold. Okay, so the robot sold here, and it hit the target just here. The stop loss is up here. I mean, it went. This was like a 4-to-1 on this trade alone, and I'm finding that price almost goes at least 3 times to 1, sometimes even as far as 6 and 7 to 1. Okay, and so we can experiment with this a lot, and this is what I'm currently doing with the robot. I've moved it actually from the risk reward is currently set to 2.5, and I've just moved it to 3, and I'm slowly, very slowly going to increase that and see how we do. Okay, and so This is a 2.5, so we sold here. The risk was here. The target was 2.5, and so we're removing 2.5 losers with 1 winner. That's great. We have another one here. So this went 5 times the risk. Okay, so that was a really beautiful trade. We have another one here, and here it is, where we bought just here. Okay, and we got out of the trade there. The stop was down here somewhere, and let me see here. So we had the entry there, the stop was around there. It's about 30 pips. I mean, it went 160, 150, 160 pips. I mean, that's a huge, that's an amazing profit trade. We're not going to get all of them, but we don't care about getting all of them. We're not going to get all of the move, but what we do want to do, we want to get enough of the move each time we win a trade. And so if you consider getting 3 times a loss as a profit, I mean, that's really, really good. Then you only have to be right 1/3 of the time, so 1 out of 3 times. And we are right at least half of the time, which is super, super good. Okay, so let's have a look at another trade. This is a loser. And so we sold here. Where did that go? Okay, we sold here. Price went up to it. We turned around. We came all the way down here. We got about a 1-to-1 on that one. And so looking at this manually, we would have saw, actually this is a buy signal. So that means it's time to get out of the trade or buy. Okay, so here we short. We got about 1-to-1 on that one. Then price went against us and we got stopped out. Okay, no big deal. We just don't want to take any one trade that is devastating. It turns out to be a devastating loss. Okay, we look at this one here. This is the dollar CAD. This is another winner. I mean, look at that. That's crazy. So we got into the trade here. We got into the trade here. We got out of the trade here. I mean, look how far this went. This is like a 20 or a 15, sorry, a 10 or a 15 to 1 or a 20-to-1. I mean, that's crazy. So we would have had like maybe 1 winner, and that would have wiped out probably 15. Let's do the math. Let's see what that is. We got in here. The stop was there. Let's say we had a 30 pip stop. Let's say we only go this up to here. Okay, so here we have 4. I mean, 10-to-1. A 10-to-1 is here. This is a 10-to-1. We're probably about a 20-to-1. Okay, I mean, that's crazy. So if you would have got, this is a 2.5-to-1. The profit, the target is just here. And then price just did this. That's what I'm almost always seeing, that when these trades win, they win huge. Let's have a look here. This one. We had another one here, another situation where we bought and we got out the target here. I mean, price went way higher, and so we could expand, we could increase that and set it to maybe 4 or even 5-to-1. As a matter of fact, I'm going to do that because at least for this sample size, which is quite small, mind you, we've had very, very big winners. And we had another one here, boom, and we wanted to buy here. A little bit early. We bought here, which is a bad idea. Got stopped out, finished. No big deal. We have a winner. Here's the winner. Let's see if this is one of those big ones. No, this was not one of those big ones. So we bought here, and I'm not exactly sure. I think the spread maybe, I don't know what happened there, but we got taken out of the trade at a small profit just here. Okay, and then we would have maybe got stopped out if the trade had not closed, and that's that. Okay, and so from what we can see, we have a tiny sample size, so we can't really draw any conclusions whatsoever just yet. But according to what we can see that when these trades go in the right direction, we see huge profits. We see really, really beautiful profits. Okay, and so what we need to be doing is we need to be doing this manually. So if you want to mimic the algo trader, you want to be selling when the histogram is low, and you want to be buying when the rather negative, not low, when it's negative, and you want to be buying when the histogram is positive. But you can also change that and say, well, we want to be we want to be buying when the histogram is increasing or selling when the histogram is decreasing. And so you could start to buy here if you wanted to. Here you could start to buy here, but then you're getting in really early in trades, and so that can be a little bit tricky. Okay, and so my recommendation is that you simply you go to a time frame greater than the one that you're trading, and you just kind of get a snapshot, and you can see where we are relative to the histogram. And let's have a look here if this quickly updates for us. So we just turned negative on the hourly. That means that we want to be selling. Okay, so take that information with you to the 30-minute chart, and then you look for 30-minute short entries using the supply and demand software. And doing that, I think you'll find that you'll do pretty okay. And again, make sure that your risk reward is skewed in your advantage. You do not want to be taking lots of small winners and one big loss. This is why you have so many traders who share results, or they say that they've pulled in 10-20,000 pips this week. I know a lot of people who pull in 10-20,000 pips a month, but they're still not profitable, and that's because they are taking in tons and tons of pips, tiny pips, like 2 pips here, 5 pips, 8 pips, 3 pips, 1.5 pips here. But when they have the losing trades, the position size is big, so the pip loss is much smaller, and it's just wiping out all of those tiny winners. And so you have to be paying attention to the average win to the average loss. This is the primary metric, the primary focal point of the analysis. And I mean, if you're doing this, using this strategy, I think you'll do very well. Okay, so we have another trade here. Do we care if it wins? Absolutely not. We don't care at all. All we want it to do is we just want to take the trade. Okay, we are beginning to move into a downtrend. This is a nice entry, so the likelihood of us reaching this is pretty high, and so that's all we need. That's all. That's good. That's fine. And if it's a loss, we don't care, because we know that one of the other trades will be the one that gives us 3 times the loss, and so the previous 3 losses will get cleaned out by one winner, which is a beautiful thing. Good. Well, I'm going to leave it at that. If you have any questions, let me know. And thanks for watching.